Yo, what is good, everybody? Welcome back to the channel. Today we have a very important topic we're going to be covering, all right? We did a poll in the Discord asking you guys what type of content you want to see this week, and the majority of you guys voted how to build narrative and structure around your setups. I'm very excited to share with you guys. Now, the Discord is completely free, so if you guys have not joined yet, I'll drop a link down below. We do free live trading on Mondays. You guys can watch us navigate the markets live as well as the trades we're potentially taking. There's a lot of private educational content for you guys, again, free, as well as charting sessions every other week where we break down technicals, concepts. We talk about the model a little bit. We go over the setups we took with the premium that previous week so you guys can learn about how we were navigating things leading up to the entry, as well as buys for the upcoming trading week. So if you guys want insight on how we are seeing the markets for the upcoming week, you guys can join that as well. So if you don't want to miss out on all that good stuff, make sure you join the Discord. Like I said, the link will be down below. Now, I have to give props to NQ Snowski for recommending the Notion idea when it comes to the videos. It's kind of aesthetic. I like it. But yeah, let's get straight into the video. So most of you watching this already have a strategy that works. However, the problem isn't your strategy. We know a lot of strategies out there work. It's your entry selection. Okay, you're taking good setups in the wrong places, in the wrong time. There's nothing backing up your setup, right? That's like I said, one of the most important things for me when I'm taking trades. I need structure. I need narrative behind why I want my trade to play out. Me wanting to play out is not enough, right? I need something behind that's stronger. That's what I'm going to be talking about today. So today, I'm going to show you how to build narrative around every trade you're taking using the higher time frame, okay? Understanding liquidity and PO3 cycles so you can instantly boost your win rate. Yes, when you start to take better quality setups, you will start to see your trades take profit a lot more, which will boost your win rate, okay? And we'll talk about PO3 cycles a little bit if you guys don't know what that is, but it is kind of a concept in its own. However, I did find a way to incorporate that into today's video. So the agenda, why narrative matters when we talk about that. The 3 core ways to build narrative, I talked about that a little earlier: high time frame direction, liquidity draws, as well as cycle context, AMD cycles. All right, I'm gonna talk about the tools that I personally use to boost my narrative and live chart examples, of course, and then a bonus. Okay, so I'm gonna give you guys my personal entry checklist that I'm using, and it already has narrative built in as a mandatory. You guys will see it towards the end. So higher time frame direction. The higher time frame creates the framework for your trade idea, right? You might have a bias, you might have a conviction of where you want price to go, and that should be formed on the higher time frame, not the lower time frame, like the 1 minute, the 5 minute. That's just not enough context, okay? So use the 15 minute, the 1 hour, the 4 hour, and the daily charts to establish, like I said, directional bias, POIs, point of interest, where the PD rays are at. So wherever those high time frame PD rays are resting, high time frame balances, draws and liquidity, CISDs, those are going to be your POIs, point of interest. And then major displacement, and market structure shifts. Now coming back to the time frames, the 15 minute is going to be more, for me at least, it's used more for entries. Not too much direction depending on how intro the setup I'm looking for is, but typically it's going to be like the hourly, the 4 hour, and the daily charts to establish, direction bias. Now, the weekly is also good. I mean, we can talk about a current example right now. If we hop on the weekly here, let's see. Okay, so on the weekly, we did mitigate this weekly imbalance. We're seeing some sort of rejection kind of, as well as that weekly CISD. So sometimes I'm paying attention to the weekly, just not as common, right? It's not every day you're gonna get a weekly, confluence. Most high quality trades from the high time frame PD rays, most high quality trades form from high time frame PD rays. Okay, low time frame entries should support, not contradict, the high time frame direction. Now, this doesn't mean that you're going to be taking your trades right as we mitigate these high time frame PD rays. We could have mitigated 30 minutes ago, and that's still fine. We're still delivering from it. I will show you guys examples. Don't worry. So liquidity draws. Price is usually targeting liquidity, right? AKA stop losses resting in the market. Identifying the active draws helps determine where price is likely to move next. Now I have the key draws I'm looking at that all you guys should be looking at every single day. You guys should have these marked out. So previous day high and low. There are indicators that do this for you. I personally don't have any indicator to do this for me. I do it myself. But I will show you guys the indicator that I use that marks out the session. So previous day high and low, previous session high and low, New York AM high and low. This is more for people trading the PM, lunch, stuff like that. High time frame imbalance. So I put an imbalance in there. It's not technically a draw on liquidity, but it is a magnet for price. You guys know price likes to pull to high time frame imbalances, right, where price is unbalanced, and go and rebalance, as well as equal highs and equal lows. I will show you guys what all these draws are. So a valid setup taken against the liquidity draw usually does not end up delivering. A setup taken in the direction of the draw typically delivers smoothly. Okay, let's come to the chart here. All right, let's look at a setup from this week. We went 4 for 3, or 3 for 4 this week, sorry. So pretty good week. But, all right, let's drop even lower here. Okay, so we have this buy side here, right? Previous day highs, right? Like I was just talking about. And here's the indicator you guys can use. It's called, you guys can search up sessions, right? And go ahead and select this one, right? My settings are right here. You guys can screenshot, go for it. I do not care. But this helps me mark out the previous session highs and lows really, really easily. So we can see right here all these highs, previous session highs, and this is a prominent, like I said, prominent draw on liquidity. Now I'll talk about this setup in a little more detail as we go over the other concepts. Let's just kind of breeze over it really quick here. All right, so let's say you took shorts somewhere here, okay? Let's pop to the 5-minute. All right, let's say, okay, we see price creating lower lows and lower highs. You see this 5-minute CISD. Okay. Mark that out. Maybe there's an internal SMT. Whoops. Maybe there's an internal SMT. And you wait for that 5-minute inversion right over here. And you go ahead and take that short. Whoops. One more. Go ahead and take that short. Okay. Targeting whatever you're targeting. Let's say you're targeting this low. First of all, you would have been brutally edged. But depending on where you got your stops, you might have been stopped out. Point is, the draw is still higher, right? I know we did take out this high, and maybe it's an SMT, but the draw is still higher. What is the draw? What is price drawing to? Whoops. Price is drawing to those draws I was talking about earlier. Previous session highs. We'll get into more detail on why price one of these highs. But yeah, so price still had buy side above that it wanted to take. Now, let's come back to the template here. Now, like I have right here, a valid setup taken against the draw usually does not end up delivering, playing out, and that's correct. A setup taken in direction of the draw typically delivers smoothly. Now, that was a 30-minute PO3 long right here, which is beautiful. We'll talk about that when we get into PO3 cycles. Now, yes, you can take the trade to the draw. I'm doing that a lot. We're always like targeting a draw on liquidity. But what I preferably like to do is take trades after a prominent draw has been swept. Why? Because those stops have been liquidated, which opens up a lot more room for new orders to be placed. All right, so I like to take my trades there, meaning price has what it needs to then reverse to the opposite draw on liquidity. All right, just simple basics on the market. All right, so let's talk about cycle context. AMD, the market moves through 3 phases: accumulation, manipulation, and distribution. Price can only be doing one of 3 things: pumping, dumping, or chopping, side to side, consolidating. So understanding the current phase helps determine whether the setup aligns with the intention of price. So for example, let's say we are in the manipulation, bearish manipulation, and price hasn't fully reached what is potentially trying to manipulate, whether it's to draw on liquidity, manipulate within or into a 4-hour imbalance, stuff like that, right? And you're taking trades in the opposite way. Let's say you see some sort of internal 1-minute long confirmation, just simply a 1-minute IFEG, right? And you take that trade and it fails. Why? Because we're still in the manipulation. Okay, I guess a little bit technical, I understand that. Same thing for the distribution. Let's say we have now manipulated that 4-hour imbalance and we're starting to see bullish price action leading back up to the highs, and you're looking at this as a continuation in that manipulation, meaning, okay, stuff like this. Let me just show you guys. Okay, so it can look something like this. All right, let's say price has accumulated. All right, we are now seeing some bearish manipulation, and let's say there's a 4-hour, let me see if I can pull it up. Let's say there's a 4-hour imbalance, all right? Or I'll put this right here. 4-hour imbalance resting below us. Whoops. All right, we're back. Okay, so let's say price, there's a 4 hour imbalance below us, and we haven't fully manipulated there yet. We are seeing bearish price action, but we haven't reached the final draw. Again, you don't know exactly where price wants to manipulate. You can have a good guess, and this is why I don't personally trade the manipulation. I like to see how those two phases play out, and I have a lot more confirmation in that third, which is the distribution. So let's say you're taking some long setups, right? You see a 1 minute IFUG, you enter the trade, and it instantly fails. Why? Because you're trading against the stage of price action, which is not smart. So once we manipulate that 4 hour imbalance, and we start to pull back here. Okay, let's say price takes out this high, and you're saying, oh, liquidity sweep. We also have this range right here, and we are in premium of the range. You're saying, okay, I'm trying to take continuation from this manipulation back to the lows. You're also going to get wrecked. Why? Because we're in the distribution phase now. So you guys get what I'm saying. Trading against the stage of price is very stupid, honestly. I was going to say risky, but it's just stupid. All right, so strong setups form when your trade idea aligns with the phase currently unfolding. I personally trade, or I use PO3 cycles for the 4 hour PO3 cycle, as well as the daily. The daily, I use it for narrative and context, which what this video is about. So I guess I can talk about it really quick. Accumulation and manipulation and distribution. I want accumulation during Asia, manipulation during London, and distribution during New York. So accumulation happens in the first session Asia. We look for price to bounce up and down within a tight range, making no prominent moves up or down. Manipulation happens in the second session London. We're looking for a clean move up or down, manipulating something that makes sense. So for rally gap, all right, high time frame imbalance, draw on liquidity, previous day low and high, session lows and highs, stuff like that. Key levels, okay, premium and discount of the range, maybe a CISD. And then for bonus here, we have SMT with the manipulation high or low. This just adds double confidence. And then distribution happens during the last session in New York, and we're looking for a distribution phase in the opposite way of London manipulated. Very, very simple. Let's go ahead and show you guys some examples on that. I'll delete this really quick. What's that? Oh, it's a daily imbalance. Okay, let's pop to the 5 minute on the indicator. So talking about draws and liquidity, told you guys I'll give you a little indicator. I don't know if I think I did, yeah. But the session highs and lows, you guys can use this. But right here, all right, from this week, 2 clean examples, okay? Accumulation during Asia, all right? We get the sell side manipulation during London, take out that low, and then you see distribution back to the cumulative highs during New York. Same thing here, accumulation during Asia, manipulate higher into that daily imbalance, and then we see all this is our distribution all the way, take out this draw a little later into the night during Asia. But you guys get the concept. So that's how I'm looking at. That's one of my prominent ways of looking at PO3 cycles for the daily cycle. All right, so moving on here, let's talk about premium and discount. All right, so premium and discount help identify where trades should be taken within a range. So higher time frame legs, long should come from discount, and short should come from premium. Intraday leg, identify the leg, the high and low. So you guys know if it's a bullish leg, you draw from the low to the high. And if it's a bearish leg, you draw from the high to the low. I have a video on how to use the fib and talking about in depth the premium and discount. I'll pop a little thing up right here. You guys can check that out. So let's talk about it, right? This is an easy way to form narrative around your setups. Okay, so we'll look at this one right here. So we'll look at this example. We keep using it. The trade on Wednesday. All right, so where does price retrace to? Okay, draw from the low to the high to the low. Sorry, because it's bearish. I'm going to delete this so you guys can see it better. What do you guys see price retrace to? Hold up. This one was a very precise retracement, so I have to draw it to the T. Let me see. Make sure to get it exact. All right, because it like barely ticked it. But we see right here, price does pull. I think it was a little bit higher, but price does pull to OTE of the range. In premium, this is just optimal trade entry. Again, if you guys have not watched that video, I recommend you guys watch it. And then we see continuation from OTE of the range. So how you guys, well, I guess we'll look at it really quick. Here's how you guys use the fib and ranges. So I'll show you guys a bullish and a bearish. Okay. draw like this. All right, I'm just gonna snap my fingers. It's gonna be drawn for you guys. All right, boom. Wasn't that cool? It's magic, huh? All right, so let's look at this. All right, we're gonna draw from the low to the high for bullish, and you want to take your longs from discount. I'm usually, when it comes to a range, right, we have a bullish leg, and we see price break structure, okay, to the downside, and I'm expecting continuation because we still have draws above us, or, you know, we're in a bullish market maker buy model, something like that. I'm expecting to see higher. Then I'm not taking any type of long until we mitigate discounted prices. It's just like a, you know, like it's like a mandatory rule for me, okay? So once we mitigate discount, which is anything below this equilibrium, ideally OT of the range, that's why I'm looking for longs. And this is when price typically plays. And, you know, on the way down here, if you're so stuck on the smaller time frames, I promise you, 9 times out of 10, you're going to see some sort of, you know, lower time frame confirmation, like a 1 minute, you know, inversion, something like that. You're gonna see low time frame confirmation, and those setups will never play. Like, let's say right here, we took this draw on liquidity. You might have seen some maybe 1 minute IFUG. You want to target the highs, you're gonna get wrecked, bro. I'm sorry, you are. So wait to take longs from discount, and the same thing for a bearish leg, right? Take from low to high. Right? What do we see? OT mitigation. It could be like a 4-hour imbalance here as well, something like that, and take your trades from discount and premium. It's just like a very, very, very basic rule, but it's gonna make a huge difference. I'm telling you, bro. When I started using this like a year and a half ago, made a massive difference in my entry selection, and I saw my trades instantly start to play out a lot more. So like I said, you know, using this is going to instantly put a better story on why your setup should actually play out. So yeah, when it comes to, okay, one more little tip. When it comes to, let's see if I can find an example here. Okay, so it'll low-key take me a minute to find a decent example. I'll just show it to you guys. So like I was talking about right here with, you know, the intra legs, let's say you have, okay, a bullish range, you see price mitigate OT, and you're looking for longs outside of that. Simple thing you can do with taking the same concept, the same idea, and applying it to smaller, you know, legs, which is still works, is you can zoom in, okay, and then you can go ahead and fib out. Whoops, oh my gosh, bro, it keeps doing this. Give it a second, it'll pop back. There we go. So you can fib out that intra leg that was made. So let's say it could be something like, just off the top of my head, okay, 5-minute inversion. You don't enter off the inverse yet, right? You get a 5-minute pullback, okay, and then you go ahead and fib out if you want to bottom or top tick moves and stuff. Go ahead and fib out this leg, and then you can go ahead and enter once price mitigates OT of that leg. The SMT at the low, even better. Go ahead and target the highs, whatever you need to do. You guys get the concept. But let's come back over here to the template. All right, so when you find confluences aligned with, you know, the key levels of the range, this is just gonna boost the confluence, right? The potential of that confluence playing out. So for example, we have, that's not completely aligned. It's not like inside is what I mean, but it's still aligned. So we have this 4-hour imbalance. And when it comes to, you know, typically when it comes to a high time frame imbalance, you're going to see price, you know, push through it on the lower time frame. It doesn't mean that we inverse it. Again, it's a high time frame balance. For example, 4-hour, you have to wait for a 4-hour close. So I would say this is aligned with OT, but I'll show you guys a better example. All right, so I'm gonna show you guys like a smaller example of what we were just talking about. Okay, so we have a bearish leg right here, draw from high to the low. Okay, and why did I not take this high? Well, because this range is already mitigated. But we're gonna draw from the high to the low. And what do we have? Anything above this purple line is premium, okay? And this purple line being the equilibrium. But what do we have aligning? Okay, we have this 5-minute CSD, but this 5-minute CSD aligns with the equilibrium of this range, which boosts the potential that 5-minute, if you're looking at the CSD, it boosts the potential of that 5-minute CSD actually playing out. So you guys get the point. Let me see if I can show you guys another example. Let's see. maybe on a more broad scale. Let me see here. I mean, we get a lot of retraces to OT of the range, but I want to show you guys one with a confluence align. Okay, I think it's probably going to be the exact same example, but or context of the example. So we have another bearish leg right here, and what do we have aligning with the key levels of this leg? We have a 5-minute CIC, pretty much the same example. But you don't usually see a 5-minute CSD tick and then done. We usually kind of push past it. Maybe it's an OTE, but usually an imbalance, right? What do we have as well? We have this imbalance sitting in OT of the range, so that can even boost the potential of this imbalance playing out. So I know I made a video on fibs of the how to fib out the range. And one of the points I made was when you have an imbalance, 5-minute, 15-minute, doesn't really matter, aligned with a key level of the range, so OTE zone or the equilibrium, like I said, it boosts the potential of that imbalance playing out, not because the imbalance was so golden, but more because of where it lies within that range. So simple way you guys can filter out nonsense for value gaps and stuff like that. So coming back to the notion here, let's talk about some questions you can ask yourself as you're about to take a trade, as you're about to take an entry. So is there a defined draw on liquidity or imbalance that you can target? Okay, high time frame imbalance. Is the higher time frame direction clear? What are we delivering out of or from? What type of structure are we in? Market maker, buy or sell model. Okay, this is all things you need to ask yourself. You need to see. Where are we in the cycle? So are we accumulating? Are we in the manipulation phase? Right? Manipulation happens after accumulation. Distribution cannot happen after accumulation. It makes no sense, right? So understanding what cycle or what phase in the cycle we're in. Okay? Are we in premium or discount of the range? If we're not, then wait. Has structure shifted? This is something I'm not really looking at too much unless it's unless it's like the 1 minute and stuff, but I don't really need a market structure shift as a mandatory to take a trade. Depends. Maybe some of you guys do. And then does the setup align with the narrative, bro? If you're taking a setup because of personal intentions, personal emotions, you need to fix that, all right? You need to take your trade off what the market is giving you. Everyone talks about how you want to be a reactionary trader and not a predictionary trader. So you don't want to predict too much, right? You can have a bias, nothing wrong with that. But at the end of the day, you have to react to what price is giving you. Okay, so what's the narrative on the higher time frame? React to what you're seeing. All right, so that's going to wrap it up for today's video. I know it's been a long one, but I want to make sure that I'm explaining things in detail. I hope that cleared stuff up for you guys. Hope it answered your questions. We talked about the multiple ways you guys can start incorporating narrative and structure behind your setups, behind your entries. I did not forget about that bonus. If you guys want my personal entry checklist that I'm using every single time I'm taking a trade, all you have to do is like the video and comment down below something like, hey, could you send it over? And we'll get that sent right over to you. But with that being said, I will catch you all in the next one.